Hi, fellow traders. What's happening? I hope you guys had a good day today. You stayed safe. We went through this Monday with the halt and what we needed to do, how we needed to trade today. Just kind of waiting and letting the market tell us what to do. If we came in trying to put Monday's plan in today, it wouldn't have worked because we had kind of the same gap down. But like we say, every trading day is unique unto itself. And so we're going to talk a little bit more about that here in a few. We're going to get deep into it. But today, I was thinking about this quote earlier today, and I felt this is the perfect day to bring this out. And it's funny, my brother-in-law put a post on Facebook and had the same quote. And I was like, I sent a message to him and said, great minds think alike. Because I was definitely looking at using this quote in my recap video today. And, we were at the height of the Depression. We were really deep into the Depression. And you had people running to the banks, pulling all their money out. You had banks closing the doors, locking people out. And it was really, really bad. And a lot of fear had taken over, and it was causing the economy to really get worse. It wasn't making things better. And so he said, and I'm gonna just read an excerpt from that whole statement. He said, "Let me assert my firm belief that the only thing we have to fear is fear itself. Nameless, unreasoning, unjustified terror, which paralyzes needed efforts to convert retreat into advance." And it was really, I can't even think of the word right now, but it was ingenious for him to characterize fear as nameless, unreasoning, and unjustified terror. Because we know fear, as a trader, fear is really prevalent in our industry. It's one of the first emotions that we have to work through. Because fear can paralyze us, keeps us from taking a trade, or it keeps us from taking a trade off because we're scared to lose the money that we're down. So fear is very real. And in this situation, we have to be calm, cool, and collected. And that's what I've been trying to portray to you guys all week. I know we have a lot of this stuff is going on, but we have to be calm, cool, collected, and execute our strategy in the market the same way. If we have to make a little tweak here or there, that's fine. That's part of the process. But we can't change how we pick our stocks. We can't change how we trade. We can't chase stuff. We just have to. I know it's hard because at the open and pre-market, you got stuff moving and you're looking at these moves. It's like, man, I could be making money here. But I'm going to tell you, if you don't know what you're doing, it's fool's gold. That's all you're looking at. Because some of these stocks are moving really good. They have a dollar spread. You get in it like, what was that stock today? It's been in play all week. ZM. Like ZM today. The pre-market, that thing had a wicked spread. If you got in it and you're one of those P&L watchers, you're gonna be down $100, $200, depending on what your share size is going in, right off the bat. And then that's gonna invoke some fear. It's gonna paralyze you, and you're either gonna take it off or you're gonna leave it on and get blown up potentially. So, we can't, and I didn't mean to go off on that tangent, but the thing is we have to stay calm, cool, and collected. Think through things. Don't overreact. And for us, we're trading the market's overreaction. We're trading the emotions that unsuspecting traders are bringing into the market. You know, we know better, but not all traders know better. Not all traders have the education that you guys have. And we actually make money off of that, off of their fears, off of their overreactions. Okay, but I'm telling you today, the only thing we have to fear about this is fear itself. The only person that can give power to fear is us. We give it power. You know, we give it a name. Something that FDR characterized as nameless. We give it a name. We give it reason. And we justify it, you know, by making it relevant. So if we don't do it, if we stay calm, cool, and collected, we're not paralyzed. We're able to convert the retreat, all of the setbacks that we have, into advances. And that's what this trading is all about. Okay, yeah, this coronavirus is really, really serious. And yeah, we should have taken it more seriously in the beginning. You know, but we're beyond that point now. Now it's time to come together and do what we need to do. We got to make sacrifices. A lot of these industries are going to get hit. Yeah, we're shorting these things and we're making money off of these companies, the hard times. But guess what? When the company's coming back, who's going to be buying it? Who's going to be buying these stocks? You know, we are. So we're going both ways. So you can't feel bad about that. We just have to continue to be consistent, stay calm, cool, and collected, and we're going to survive this. All right, so let's take a look. Now, this is Monday's trade. Okay, and I brought this up because I wanted to show you the difference. We had a gap down on Monday. The market halted right here out of the gate, 15-minute halt, and then it came back. And what I was telling you guys on Monday was, most of the time when we see a gap down, the early money is going to be to the long side. It's not going to be to the short side. The early money is typically to the long side. But it doesn't always happen, so you have to wait, be patient, and allow it to set up. And that's what we did here. Even though we got in and it came back and knocked us out, and I didn't get back in, what happened on Monday? You guys remember? I told you what happened to me. Clear case of me letting fear paralyze me, and I didn't take the trade. I didn't get back in. I didn't work it like I was supposed to. There were opportunities to get in all through here. But I waited. Ended up getting stopped out again. But I stayed engaged. I realized that we were starting to come back. You know, the money to the long side was pretty much dried up. It's time to roll, man. And so we got back in. We made a couple bucks on Monday. But that taught me a lesson. Again, not to let fear come in. Let the market tell me what it's going to do. If it shakes me out, let's re-engage. And let's do the things that we need to do in order to be profitable. So we look at today. Same deal. The market sells off. And we open up, and the money is trying to go to the long side here. But I don't like what I'm seeing. We have this big push, and yeah, I could have gotten in on the opening range break. We had the 100 here that I could have played with, but the market just didn't look right to me. If you look at the SPY, and I didn't pull up a SPY chart today. I should have. Let me see if I can find one real quick. I think I still got it somewhere. No, we'll just use this one. Turn it into a 5-minute chart. So if you look at the open back here. So if you look at the open right here, you can see here's the opening candle. We didn't really start moving. We didn't, the market just wasn't doing much for me. And so since it halted, and I'm waiting for it to put in some direction so I can feel good about taking these trades. When I have a stock that doesn't have its own catalyst, like ROKU, and that's going to move with the market, I defer to the market to tell me what's happening. You know, I've explained that to you guys over and over again in chat. I know sometimes you forget, we get confused, but that's the key. If I'm trading a stock on earnings or something like that, I could care less what the market's doing, because those stocks typically move based on their own catalyst. So this was, you know, it kind of gave me some pause here. And I said, as long as we stay in this opening range here, this is the 5-minute candle, it had to give me some decent breakout of this. And I kind of waited and waited and waited. And I went to lunch early, came back, thought we had it. But you can see what happened. We had some news in the market, and that's what kind of caused the first issue. But then it settled back in, and look at the trend we put in on into the close. And very tradable trend. Very tradable trend. So here's where we got in. And I come back out to lunch. I like the way the market's moving. I get in. Okay, this is normal. We start to sell, then we bounce, come back up into resistance. We don't make a higher high, but because the resistance is trending down, we reject the resistance again. We're starting to come back, and then some news comes out, moves the market. We can't predict this. Okay, we can't. And what happened was we bounced here, and because we rejected the last time, I'm like, you know, maybe we just have to shake some more people out before we come down. And this candle opens, we start to sell a little bit, then it rips up and it hits my max loss stop. I had no idea that this was going to hit the stop. I put it there when I got in because I knew I needed to give it enough room to play with this. But honestly, when I put this stop in, I didn't think we had a chance of hitting it. I figured that I would be out before it hit. And it turned into a pretty big hit. Like 500 and some bucks. Because I was in full size and I kind of rolled the dice on this because I didn't think we would hit it. Look at what we were putting in here. And we were showing some tremendous weakness. We could not push over this level. Had a double top here. And of course, I was looking long early. But it just never materialized. So I knew later on in the day, we're going to lose it again. And we're going to roll over and we're going to start coming back. And that's why I look for the short here. Now, here's the rejection. The trend continuation. We're continuing the trend down now. But I waited until we got under this 5-minute opening range high. I wasn't going to short into this because, as you can see, this held as support in a couple of places. And then resistance. So I'm always going to respect the opening range high and low, the 5 minutes. It's been respecting this level for a long, long time. So as long as it continues to respect it, I know the 5 minute is where I need to be. You know, until it stops respecting it, then I'm going to find out what time frame is being respected. And then that's where I'm going to move my strategy to. But until then, I'm sticking to the 5 minute. But you can see here we ended up getting stopped out. Here we made another run up, triple topped this 85 or 86.50 level. Triple topped it, then sold off from there. Again, I'm not getting in until we break this. And you can see we held on this level a couple of times. Soon when we broke down, I took it. We ended up bouncing again into resistance. And we just kind of held on to it. And finally it broke and started hitting my targets. Now, I wished it would have hit when I was still here, but unfortunately, I had to leave to go get my son like I have to do every day. I don't like to, when I leave, I like to not, I like to have taken profit at least once or twice, and I only have one piece left out waiting on my final target so I could put in a range order and I won't have to worry about anything. I'm trying not to have to take my laptop with me, and kind of trade on the fly. I really hate that, but I had to do it today. You guys, if you were paying attention, you heard me whining about it, but I had to do it because I haven't taken profit, and until I do, I'm a little bit antsy. But finally, it hit the target. I think I got 5 minutes away from the house, and I heard ding. So I was like, yeah, we got it. And so I felt a little bit better, and I didn't have to open my computer until we got to my son's school. And then we were working on hitting the second target. And once we did that, I was able to put the range order in and close it and drive on back home. But this is 100% the trades that we like to take every day. Sometimes this trade happens here, and then we can continue trading it down. Sometimes things get broken. The market got fractured today, broke it out, and then we ended up with this. But all in all, halfway decent day. I only ended up with $83, not as much as I made Monday, but this right here is what hurt. This is what put us in a hole right here. But this was a beautiful, beautiful trade. Did everything it needed to do. The only issue was I took a little bit too much of a loss here, which kind of skews my profit-loss ratio. But that was a decision I made going in. Now I see that it's a bad decision, but I have to live with it. But nice day today. So, what we did aftermarket today. Now, Benzinga, it's still up. And so Charlie came on and said Disney to close Disneyland and some other park or whatever. I'm like, oh shit, let's get to Disney. So I went. It hadn't started moving yet. So I'm like, oh man, this is beautiful. Jumped in 200 shares. And that's when I typed it in chat before I could get on audio that this is what I was doing. Not that I wanted you guys to follow me, but I wanted you to know I didn't want to bring this up and then you was like, hey, you didn't tell me this is what you were doing. So that's what happened. And this is one of the rare occasions where I will get in a trade and not have a target. Okay. I got in because I knew this thing could wash. I had no idea that we were at the 52-week low. But when I saw it, we're at the 52-week low. I'm like, yeah, this is cool. But then I looked at the chart. I had to go back to a 10-year chart. And I saw that we had multiple strikes on 90. And that 90 was going to be a really, really tough nut to crack. But I felt if we crack 90, we have another level down around 86 88, 86, 87, somewhere in there. 86.25. I'm sorry. We have another level at 86.25. It's right there. You can see the number, but you can't see the line. And if we get through 90, I think if we break 90, I think we can get through. But if you look at, let's look at the trade now real quick, since we're all here together. All right, so this is the live chart. Look at all of the orders stacked up at 90. Look at all of the orders. This is my order here for 85 in case we get a flash crash. So that's my 200 order, 200 shares sitting at 85. But look at all of this that it has to get through. Doubtful that we're going to get the volume. But what can happen, and I've seen this happen plenty of times, all these orders get pulled. You're sitting here looking at all these orders, and then all of a sudden, they disappear. They don't go through. You don't see them go through time and sales. Nothing. They just disappear, and the bottom falls out. This is why I tell you guys, professional traders do not use level 2. They don't. Now, these guys that are professional scalpers and do the quick momentum trades and stuff like that, they rely heavily on level 2. But the professional traders, the guys that do longer term trading, they're not so much momentum traders, but they're trend traders, kind of like what I do. We don't really put a whole lot of emphasis on level 2. It's more, we're watching the price action that's happening on the chart because we know this could change at a moment's notice. And if we're trying to make decisions based on what we see here and put it on a longer term chart, it just doesn't work. So, but we're seeing this now. There's a lot stacked up on here. We know this. We already know. I've already seen it through all of this candle. I've seen it. There's no way you cannot see the support here watching the price action. So I'm going to be watching that the rest of the night to see, if it can't crack it, I'll probably take this position off. If we do crack it, I'll probably leave it on overnight. I might have, in the last couple of days, I might be flagged as PDT, pattern day trader, and get locked up because I think I might have gone over my trades, but we'll see. Time will tell. All right, guys, so that's going to do it for me tonight. You guys have a great night, great evening. I'm sorry this was a little long, but I had a lot to cover. And I will catch you guys in the morning.